please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then keep an eye out on a couple of stocks. Sonia was just talking about ITC. Remember, it's expected to do an EPS of around 10 rupees, so it was trading at around 26 times, or in comparison to other FMCG companies that trade at 40, 45, 50 times. The stock has moved to the high point of the day. Purunju joined us yesterday. He was talking about this stock. He says that, in fact, it's set to take off, and it's taken off today. So it's up 4%. But not just that, we were talking to Purunju even about Britannia. And he said, look at Bombay Burma. That has a holding in Britannia. And that stock as well, as we speak, that one has moved to the high point of the day. So that's Britannia holding with a gain of around 0.5%. But you pull up Bombay Burma, that stock suddenly has moved higher. Purunju had spoken about this stock as well. So just keep that on your radar. But how do you trade the Nifty from here? We're holding with a gain of around 20 points odd. Ashwani Gujral as well as Sandeep Wagle, both of them join us. Good day, gentlemen. Thanks so much for joining in. Ashwani, coming across to you. What's the trade on the Nifty from here? A better second half of trade? Or do you think, in fact, we'll falter from here?
See, the intraday high on Nifty futures is about 10,581. We are at 10,568. So I don't think, great amount of bearishness has played out since morning. Now, what happens when the side that's expected fails to deliver, which means the bears are kind of failing to deliver, the bulls get emboldened even further. So my sense is this holding of 10,550 is a bullish event. And in case we start breaking intraday highs in the second half, you could have a fairly strong short covering, because had the bear side been strong, by now you would be down 80 to 100 points. That not be happening means that there is a good chance that second half could be better than the first half. Having said that, there are several spaces which are jumping up. We had earlier spoken of hotels. Now media is making a very strong comeback, Sun TV, TV Today, etc. So TV Today is a buy with a stop of 468, target of 490. Capital First is bottoming out. Both IDFC and Capital First are moving higher. So Capital First is a buy with a stop of 650, target of 675. Amara Raja is a buy with a stop of 828, target of 850. And if anybody is taking long positions, the final stop here is about 10,550. No long position should be held below that.
All right, so you did speak about media and hotels, but the other space that everyone seems to be jumping onto, Ashwani, is FMCG. So we were just talking about ITC, but HUL is also at a new high today. Pidilite, Godrej Consumers all doing very well. Any fresh trades that you would advise there?
See, ITC is the fresh trade. Also, Godrej Consumer is breaking out of a sideways zone. So maybe 1250, 1300 can play out there. And down the line, you have Parag Mill Foods and all kinds of smaller companies. Godrej Industries is moving up. So all kinds of FMCG is now moving higher. And that is what is supporting this market on a day when both IT and banks are a bit lower.
All right, let's get Sandeep as well for some picks. Sandeep, what picks do you have for us today?
Afternoon, Nigel. I would go with a buy in a IDFC, stop loss of 52.50, target of 57, and a buy in a DHFL, stop loss of 594, target 615.
Okay, gentlemen, thanks a lot for joining us. We'll keep coming back to you through the course of the day for more strategies. But for now, let's focus on a stock. Magma FinCorp is a stock on our radar. There's some fundraising that the company has done, 500 crore rupees. Kailash Baheti, the CFO of Magma FinCorp, joins us now. Kailash, hi, good afternoon, and thanks for being with us on the channel. Can you just start by telling us about the fundraising that you've done? What would you need the money for? And by when, will your whole process get completed?
So I think we have just done 500 crore rupees capital raise. The allotment was done last Friday, and the objective of the capital raise was that we have had a degrowth in our AUM, and now our disbursements this year would have been higher than the disbursements last year, and we expect our AUM to now grow, and therefore we thought this was the right time to raise capital and have raised capital.
Right, so if you could help us out, what does this take your capital adequacy ratio to? If you could give us that details. And second point, what does this take your book value to?
Yeah, so our capital adequacy prior to capital raise was about 20.5%, of which about 16% was the tier 1 and about 4% was tier 2, and this capital raise will increase our tier 1 by about 5%, so the 16% goes up to about 21%, and tier 2 4%, so we would have total capital adequacy at about 25%, and that would be one of the best capitalized NBFC today with 25% of capital adequacy.
Okay, you did mention that your disbursement and AUM growth was something that the AUM growth particularly was something that was, weak. In fact, last quarter, I think you saw a downfall of almost 12%. Sitting on a base of 15,000 crores, what kind of growth do you see in AUMs over the next 1 year or so?
So I think last quarter our AUM was almost flat. There was just a 10 crore rupees degrowth in our AUM. And this quarter onwards, that is quarter 4 onwards, we have mentioned at the end of quarter 3 also that we would be moving into the growth phase. And I'm sorry I would not be able to give the numbers because I am under certain restrictions on what kind of growth we will see in the next financial year. But of course we have moved into growth of our AUM from this quarter.
All right, Mr. Baheti, if you could help us out with your asset quality. Your gross NPAs, I think, are around that 7% odd mark. How do you see the asset quality moving ahead? I mean, do we expect an improvement from here?
Yeah, sure. So there again, we have been at 120 DPD NPA provisioning. We were at about 7.2% of NPA at 120 DPD, gross NPA, and NNPA was at around 5.4%. And even again, at the end of quarter 3, we had given the guidance that end of quarter 4, we would, when we move to 90 DPD provisioning, we would more or less be flat in terms of gross NPA and NNPA. And I think come quarter 4, and we should be very close to the numbers we had mentioned at the beginning of the quarter, which means that our NNPA, GNPA should be almost flat, even which we move to 90 DPD provisioning against 120 DPD earlier. The fact remains that quarter 4 is usually very good for the entire financial services industry, and this has been exceptionally good for the entire industry. And whatever steps we have taken over last 2.5 years, 3 years for improvement in our portfolio are clearly bearing fruit. And from the beginning of the year, we would have made significant progress in terms of improving our portfolio quality. Secondly, the portfolio quality is also a function of how your denominator moves. And we have actually degrown our AUM. While last quarter there has been a growth, but overall for the year there has been a degrowth in our AUM, and therefore with the denominator decreasing, we have still done significantly better in terms of our GNP and NNP, and that speaks the full story.
Lending portfolio has been skewed a lot towards sectors that that are exposed to the rural economy. So whether it's tractors, commercial vehicles, multi-utility vehicles, etc. And we're expecting the rural economy to pick up because of the positive monsoons, etc. So do you think that all of that together could lead to an improvement in your book?
Absolutely. I think you have said exactly the right thing. In fact, we see that the rural economy has done very well. And this is clearly visible from the tractor growth of about 19% this financial year. I am talking of the primary sale of the tractors this year. The growth is almost 19%. And we have also seen money in the hands of our consumers, customers.
Sorry to interrupt you there, but although tractor profitability is good, tractor financing is a very volatile market. So, are you seeing any slowdown in lending over there, or is it picking up?
So I think composition of tractor financing in our portfolio was very high. Overall portfolio, we had about 18% tractor book. So there we had decided at the beginning of the year that we would go a little bit slow on tractor financing, and we have become significantly more focused on financing of used assets. So there has been a little bit change in our portfolio, and used assets, as you would see that even when our AUM degrew, the used assets grew significantly. However, tractor remains an important product for us, and I can confirm that within tractor, this year the portfolio has significantly improved from where we were at the beginning of the year.
Okay, all right. Thanks so much, sir, for stopping by and in fact giving us all those details. All the best for the remainder of FY19. But let's pull up the European markets. I think we're getting initial rates coming out of there. So those markets should come up for you on the screen. Well, it's green on the screen, so good going. Some support coming in from those European markets, opening up with gains of around 0.2% to around 0.3%.
Don't be fooled by the flat movement on the index. Beneath the surface, there's plenty of action. We were just telling you about some of those stocks. Sona Koyo is one stock that has suddenly zoomed in the last 5 minutes. So just take a look at that. In fact, it had a huge degree of underperformance in the last 3-4 months. But just now, last few days, Sona Koyo has bounced back to its closer to its highs and looking pretty good over there. But since we're talking about mid-caps, let's focus on one stock. KNR Construction is the stock on our radar right now. To discuss what's the outlook for FY19, we have with us today K. Jalandhar Reddy, the Executive Director of the company. Mr. Reddy, thanks for stopping by. Your order book suddenly jumped up from 3,000 crores in December 2017, now sitting at almost 8,000 crores after the 4 HAM projects that you bagged in Q4. Can you tell us a little bit about this space? You entered late, but you're betting big going forward?
Actually, the order book, no doubt it has gone up. But however, we are further targeting another 1,000 crores in the FY 18 and 19.
Well, Mr. Reddy, your order intake in FY 18 was much stronger than your own guidance of around the 3,500 crores odd. Shouldn't FY 19 see a lot more orders than FY 18?
Actually, if you look at the prospects, now the Bharatmala Pariyojana is coming up in a very big way. And we are also planning to grow the company in a scale which we are expecting. So definitely we need to participate in some more bids and get some jobs for us, which will improve the visibility in our company as well. The works now which are coming in the HAM mode, the bidding is also very sensible. So we are quite confident of getting new jobs in the coming year.
Okay, isn't 2,000 crores order inflow target a bit conservative? I mean, you know, since you're doing so well.
Maybe a little bit more, but right now we are focusing to 2,000 crores.
Well, Mr. Reddy, you mentioned that a large part of your new orders will be executed only in Q3 onwards. That's for FY19. With that kind of a scenario in mind, what kind of revenue growth can we expect in FY19? Can it be, what, closer towards the 2,500 crore mark?
Maybe this time we are expecting the same levels because 2018 and 19, the new orders only we can start to execute from 6 months from today. So that will fall in the third quarter of this year. Definitely, maybe that all the works initially the works execution will be little bit in the slow phase because of the lower level items of the BOQ. Then we also expect some good growth in 2019 and 20.
Okay, so what are we looking at in terms of revenues then? 2,000 crore revenues in FY19?
Conversation with Mr. Reddy, the ED of KNR Constructions. Well, sir, your margins have been strong, you know, in that 15-17% odd range, given your backward integration. Now, is that trend likely to continue? Can you reach back to, say, the 20% odd mark that we saw a couple of quarters before that?
Last year, we had some projects which have been completed, and thereby end value has been converted or end value is released into the profits due to budget issue. Now, I think going forward, all the new and old orders combination could give around 14 to 15% EBITDA only. That's what we are expecting.
Okay, you also have some land on your books. Can you tell us a little bit about that? What's the valuation of that land and what do you have in terms of plans going forward?
Right now, we haven't given any thought what to do on the land banks and all. But however, in near future, we may plan something. But 1-2 years down the line, we haven't planned anything on that.
Well, Mr. Reddy, I'm going to make a try on this one. You've given us an outlook on your revenue as well as your margins. Give us some color. What can your bottom line expectation be?
Bottom lines concerned, I've already mentioned that around 14 to 15 would be the EBITDA levels. And going forward, the income tax is also included in this. So a little bit the taxation in the in the year of 18 and 19 is going to be increased. So the guidelines would be around PAT is varying between 5 and 8.
Okay, so let's just wrap this up by asking you a little bit about the long-term plans. What's the target for the next 3 years? Can you grow your revenues 25 to 30% every year, even post FY19?
If the growths continue like this, the order inflow is also continuing like this, definitely we can grow at 25 to 30% every year. That's what we are expecting.
Okay, all right, Mr. Reddy. Thanks so much for stopping by and giving us all those details. All the best for the remainder of this fiscal.
Happy Akshaya Tritiya to everyone, and we're here in the studio discussing whether or not we should buy that token gold coin. But Manisha Gupta is here to tell us that she will be doing it today. Manisha, you buy the token gold coin every year?
I do, and so do you, as you said. And we've been telling Nigel to do it as well.
I'll do it. Since
if not for himself, maybe for his wife, right?
For sure. Now that I've got good advice, I'm going to go ahead and do it.
Let's get in some more good advice then. And joining us for that is, on our guest is Dharmesh Bhatia. Dharmesh, hi, good to have you. Happy Akshaya Tritiya to you as well. What are you advising people who would want to invest into gold now? I mean, we have seen 8 to 10% gains in last 1 year. You know, what at best, what do you expect as a gain or as a return on investment in next 1 year or so?
Happy Akshaya Tritiya to you and the viewers. Definitely gold has rallied, but the major contribution is just because of the rupee depreciation. Rather than international market is still flat. As per statistics, last 6 years on Akshaya Tritiya, or you can talk about Q2, out of 6 times, only twice the market has given 4.5% return, whereas on an annual basis, the market has given 3.5 to 4% return. So on an average with inflation, I don't think so that gold has given more return. But if you calculate, investing in equities would have given more return on Akshaya Tritiya rather than gold. But nevertheless, it's a sentiment issue. But I would suggest that NSE has created a new gold bond scheme with 2.5% guaranteed return with appreciation. That would be a preferable investment rather than buying physical gold for short term.
What is your sense? Because the street really seems divided when it comes to gold returns. We have seen levels of 1300 being talked about people, and then 1450 on the higher side as well before we close this year. What are your charts telling you?
As per chart and fundamentally, definitely all just because of the Trump policies and trade war going on, the gold has showing some jittering, but it's trading at almost 4 years high. The range is still intact, 1377 to 1280. That's the range market is trading internationally. But the demand internationally is not as much as compared to India. But still, if you talk about last 5 years, from 1100 tons to almost 800 tons, the gold has actually, the buying of Indian government has been reducing day by day because government also itself doesn't want the physical gold to come because of the trade deficit.
Sure.
So I don't think so that gold will appreciate higher from this level. I think it's a peak out price. You can see some kind of correction from current level also in coming days.
So if you had to choose between gold and silver, which one would that be? Do you see silver taking more strength because of the industrial applications and the fact that we have seen industrial metals actually gain quite a bit?
But silver is actually not performing as compared to gold. In fact, see, silver is trading at 1640, 1680 levels for past so many weeks, almost like 3 months. The market is same par. In fact, if you see the bullion pack, palladium is the only commodity which has given a positive return compared to platinum, gold, silver. In fact, diamond has also given a negative return of 3% in last 7 years. So on an average, the only palladium has given a positive return.
Talking about industrial metals as well, Dharmesh, before we let you go, what is your sense there? Because we have seen aluminum prices continue to gain. Today actually has been a day where we have seen nickel and copper hold well as well.
See, base metal actually is gaining because of the trade war, nothing else as such. Domestic market, because of rupee depreciation, almost 1 rupee has been depreciated in last 1 month. So you can see the price has actually given a push. I'm expecting around 160, 161 is the level where market will consolidate. Fundamentally, as such, only just because of the supply constraint, the aluminium has rallied, whereas copper is still trading in LME also is trading at 403, 405 level continuously for past 2 weeks. In domestic market, 440, 444 is the level where market is consolidating.
Okay.
But I think it's a peak out price. You can see some kind of correction in coming weeks.
Okay.
Okay, well, on that note, thanks Dharmesh, thanks Manisha for joining in. Once again, happy Akshaya Tritiya. You know what, you don't have to invest in gold today. It's auspicious beginning, so you can invest in anything. I mean, equities, land,